You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family, your business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly. 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. There's a lot to celebrate. Absolutely incredible Kids Day. Okay, we can go with that one. I hope that you feel that your kids are absolutely incredible. Spray tanning day. I guess our friend Todd Halterman, probably they need that over there in Washington or in Idaho. Spray tanning day. Of course, then again, Southern California right now, we're not doing too much better. We've got, it's pretty raining here, so not seeing. Todd must have sent us. Todd's going to be joining us in just a minute. He must have sent us some of his Washington weather. I don't know. National Curl Crush Day. Well, I used to have curls. I don't have them anymore. Panda Day, Farm Rescuer Day. I think it's Bank Rescue Day, isn't it? I think that's what it's really called, is Bank Rescue Day. Although, once again, this week, like last week, Janet Yellen said there's nothing to worry about in the banking sector. If you want to believe that, I've got some beachfront property right here in the city of Orange. Everything You Do Is Right Day. Obviously, that was not written for any male that I know who's married. Just throw that out there. National Artichoke Hearts Day. Okay. Well, I got one of them, huh, Josh? We got one out of the whole list. Okay. Moving right along. Should we see what the markets are doing today? They've been jumping around a lot. And maybe, should we just call this Bailout Thursday? Dow Jones Industrial Average up 165 points. The S&P 500 is up 44. NASDAQ is up 205. Oil is up 9 cents at 67.70. And yes, it is bailout day. Morgan Stanley and JP Morgan look like they're going to come to the rescue of First Republic Bank. But Janet Yellen says there's nothing to worry about. I guess they're going to the rescue just for fun. You got to love it. And the Federal Reserve, or actually, I guess we should go now. We can't even say Federal Reserve. We've got to go with the term central banks. So because the ECB is out there still raising rates right now, not realizing that what they're doing is causing all the problems in the banking sector. Because they can't figure out how to look forward instead of look backward. Think about this. What the Federal Reserve has done recently is kind of like going to a doctor, right? So when you go to a doctor and you get an antibiotic, you put the pill in your mouth and you don't feel better instantaneously. That's not the way they work. You put the pill in your mouth and over time, you've got this lag effect. That's how they work. Now, the same thing is the case with the Federal Reserve. Now, they're raising rates. Okay, I get it. But it's going to take time for that to happen. Now, if you go and you take a pain pill, let's go with a pain pill because that's a little bit more quick. You can tell the benefits, right? So you go and take a pain pill. I've used Tylenol with codeine for knee pain, back pain, sinus pain, a lot of different issues. But you take one pill and you know that maybe a half hour later you're going to have some benefit from it. But what the Federal Reserve is doing right now is they take a pill, it didn't work instantaneously, so they take another one. And it doesn't work instantaneously, so they take another one. And so on and so on. Now you get down to where they've taken their, 8th pill in a row. They've raised rates, 8, 9, 10 times. Todd might know that better than me. But they've raised rates over and over again. And you wonder, okay, at some point in time, they're going to say, it takes time to work. Well, we're already seeing that things are working. We're seeing the economy slowing down. Live radio, live broadcasting. So now my timing is all off. So Josh will have to give me even more cues than normal. But hey, you know what? I don't even remember where I was, but I know we were talking a little bit about the Federal Reserve just going and looking in the wrong direction. And we've got to get them looking forward. Now, March 22nd, they're going to raise rates again because that's what the central bankers are doing, regardless of how much it hurts the economy. Jerome Powell chatting with Senator Kennedy last week in a Senate hearing admitted that what he's trying to do to bring down the inflation level is going to, by definition or by history, maybe not by definition, but by historical standards, it's going to end up creating 10.5% unemployment. 10.5% unemployment. Can you imagine that? That's what they're trying to do, is to put, we're at 3.6 right now, 3.6%. So they want to triple the unemployment level in order to accomplish what they claim are their goals, their mission. Hard to believe, but that's what they're trying to do. We'll see what happens. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, we are going to chat with our friend Todd Halterman. He's going to give us some ideas on maybe how we can protect our investments, how we can protect our portfolio in a recessionary environment. We're going to talk to him about that. You can reach him anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We will be back in a very quick moment.
Ron Siegel Radio, your home and mortgage connection.
Are you like many of your neighbors trying to figure out how to pay off your debts so you could retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at ronismylender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037. ronismylender.com.
Homeowners over the age of 62 are taking back financial control after retirement with reverse mortgages, and the Siegel Lending Team is here to help you use it to your advantage. Call Ron Siegel with Geneva Financial to receive your free information booklet with no obligation. The booklet answers all your questions, and the best part is, you still own your home. Call Ron Siegel at 1-800-306-1990 or visit ronsiegelradio.com.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates, with consumers across 35% of all mortgage transactions nationwide. Interest rates have been coming down because the banking system is so healthy, Janet Yellen. Maybe not. But the interest rates are coming down. 30-year conforming loans yesterday, the rate dropped pretty good amount, 6.482. 30-year jumbos dropped 6.539. FHA dropped 6.422. USD for those in the rural areas, 6.478. Those dropped a bit. And the VA loan, that was the one that was down the most yesterday, 6.086. Looking forward to our date of May 10th, I think, is when we're going to really start seeing the benefits of the inflation numbers that we look in the background for the Federal Reserve. That's, they look backwards. They can't figure out the numbers that we share with you all the time. But let's take a look and see. S&P 500 now up 48.3. The 10-year Treasury is up 3 basis points. It was down earlier in the day, 3.507. That's the yield, the interest rate. The mortgage-backed securities, they're down 17 basis points. It means interest rates are up a little bit today. Why is this happening? Well, the European Central Bank decided to hike 50 basis points this morning, not caring about the banking crisis in Europe, although they did not commit to any further hikes. Yesterday, the financial contagion risk spread to Credit Suisse after their largest shareholder said they wouldn't raise their stake. As a result, the stock plunged as much as 31%, but the markets found some support on the news that the Swiss National Bank was willing to step in to provide liquidity. Will our Fed now have the cover to continue hiking on March 22nd? We hope not. We hope they don't do it, but looks like they're going to raise 25 basis points because they want to save face. They want to try and say that Janet Yellen knows what she's talking about, even though we know better than that. We know that Janet Yellen,
idiot. Such an idiot.
Yeah, she is.
Idiot.
But
nothing like a little air superiority.
Yeah, that too. So here's the issue: is they keep raising the rates. Jerome Powell said that he wasn't worried about an inverted yield curve. Be the first person in economics that wasn't worried about that. So we'll see what's happening. We're going to come out with a full-on report on what's going on in the banking sector. You'll be able to get that whole video from us probably by the end of the week. Initial jobless claims measures individuals filing unemployment benefits for the very first time. Fell 20,000 to 192,000, back below that 200,000. Continuing claims of those that continue to receive benefits after their initial claim fell 29,000 to 1.684 million. Labor market still remains tight with employers trying to hold on to workers, unless you're at Facebook. Housing starts and permits. Starts in February were up almost 10% to 1.45 million unit annualized pace. Starts are down 18% year over year. Single family starts, which are most important, rose 1.1% last month at 830,000 unit pace, but January was revised lower. Housing permits that projects the future were up almost 14% last month at a 1.52 million pace. Remember, we need 1.9 million just to stay even. So we're not holding on right there. Home builders, their measured builder confidence rose 2 points in March after rising 7 points in February and 4 points in January. So the index is now at a level of 44. 50 is even. So we're still beneath the level of 50. So still not looking real good on that one either. Manufacturing is weak. I told you that a little bit ago. We'll watch all these for you. That's the Mortgage Minute brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Now let's chat with our good friend, colleague, Welcome back, Todd Halterman. How are you, buddy?
Morning, Ron. How's it going, buddy?
Good. I don't see any snow in your background, so you guys must be getting some good weather over there.
Oh, I've been getting rain to melt it off. It's been beautiful.
Rain. Okay. So we don't know anything about rain. I think we only got like 2 inches or 3 inches yesterday. Gotta love it, right? Gotta love all this
it's
rain.
It's crazy everywhere, man. It's crazy everywhere.
Well, something, at least we know one thing for sure. And Todd, this will be very pertinent to you as a financial guru. And we're not giving financial advice today. We're just giving education. Got to get that in there when Todd's on the show. So if we I don't know if you saw this, Todd, in the minutes from the United States, that one of the latest Treasury meetings, led by Janet Yellen, the number one topic on their agenda was not dealing with the Silicon Valley Bank or Republic Bank or the banking sector. They had to deal with climate change. So you got to just wonder, don't you, about where the priorities are. If all of government, they worry about only climate change and not what their individual responsibilities are. It's kind of scary anymore.
Well, they're really manipulating climate change in the fiscal policies and in the financial centers of the world.
I'm thinking that there's going to be some pushback at some point in time. I don't know when that time will be, but, again, not giving any financial advice, but just in my own opinion, is it's going to be a great time to short a lot of these companies that are involved or bet against, I should say, because most people don't understand shorting, but bet against all these woke companies and climate change issues. And we all want a good environment. We all want clean water and clean air, but some of these things are just going too far.
Well, the primal incidence of food, shelter, clothing goes back to in the economy of getting back to fundamentals. And we need to get back to fundamentals in the economy and accountability and responsibility and all these words that people say they don't like, but we need it.
Absolutely. So I've been saying for some time that either we're in a recession or heading to a recession. And that scares older people, right? Young people know one recession because they only know that we did our millennial and old man show yesterday. And a lot of the millennials only know the recession of 2008. So they think that all that's going to be affected is real estate. But you and I know different than that because we've been around a little bit longer, just a little bit longer. And, people that are getting close to their retirement, they start looking and saying they've been around for 4, 5, 6 recessions. And they realize that the fact is if they've got, I'm just going to use a small number because you can then multiply however you want. They got $100,000 in their retirement account, and that drops 30%, in a recession, or 25%. They're going from about $9,000 a month in living to about $6,000. Kind of hard, right?
Well, and everybody's definition of recession or experience with it is different. I tend to agree with you. We've already been in a recessive climate. consumer confidence is down, consumer spending is slowed down, the banks are very tight, interest rates are high. The only thing we're missing right now is large scale unemployment with no jobs available to put these people into. Manufacturing still not running at full bore. We have help wanted signs everywhere. This transition is a rebalancing of our economy and a reshuffling of areas of our strength. And if we do it right, we'll reset policy on our fiscal budgets and trade, and we will increase our revenue.
The key words there were, if we do it right. Right.
Back to fundamentals.
And we generally don't see that we increase the federal government doesn't generally increase revenue when they increase taxes.
It's a marginal increase if you see it at all, because their budgetary constraints loosen to accommodate all the new revenue of the tax settings. But we really have to increase productivity across the country and keep the job markets open and keep expanding. The education system, the medical and health system, everywhere you look, there's a shortage of people to fill pertinent roles in our economy.
I think a lot of it, and I was just listening to I forgot where I was last night, and the discussion was that one of the folks wants to spend a lot of money. One of the big wigs in the economy in the country wants to. Oh no, it was a company here locally. They want to get back to ROP type schools, trade schools. I think that's needed.
It is needed, and it's been really overlooked in the last decade or so. The skills centers of the high schools around the country used to be full, and their revenue sources were full. But teaching these kids applicable skills and trades, we need them, and we need them in large scale.
So I was listening to a story on the business channels earlier today, and in some of the reports I read, and one of the comments that came out was that we're going to have with the interest rates the way they are, with the banks scared, right? Because they don't know when their next Jim Cramer segment's going to come on, telling everybody that SVB, the Silicon Valley Bank, is a great buy, and then 2 weeks later they're out of business. And there's a run on the banks, because what Cramer did is he actually brought light to the fact that this bank was, $15 billion underwater, and people start wanting their money out. So the banks need to raise money. They raise money by lending out less money. When they get the redemptions, they don't lend it back out. Do you think that's going to cause a problem in our economy?
Well, it already is. You're seeing banks tightening their lending standards and underwriting. You're seeing, frankly, a lot of deceleration of money and lending across the board. It's already happened. It's happening now. But when they lowered the Federal Reserve to zero during COVID and allowed banks to loan out all their money for PPP loans and real estate loans, these banks have to recapitalize. And now they're going back, getting their loans matured, and going back and having to buy money 4 times more expensive than it was 2 years ago. It's a recipe for a problem, and the government created it.
And they don't want to admit it, because nobody ever wants to admit they're wrong in Washington. So we're going to have to figure out, how do we solve the problem on our own? We're going to chat with Todd about maybe he's got some ideas on how to protect our investments, how to protect our retirement funds, how to be careful or to become recession proof. We're going to talk with Todd Halterman about that when we come back. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our any part of our program, the replay is available. Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you a veteran, own a home, and need money? The Siegel lending team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel lending team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at ronsiegelradio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Are you like many of your neighbors trying to figure out how to pay off your debts so you could retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis. rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. Or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. It's a great tool. Not only does the tool offer you, a whole host of various things in there for getting prices on property, seeing what properties are available for sale, what's on the market. But the tool also has a financial locker built into it. It's called FinTech. And you can actually go on to FinTech and you'll be able to put budgets in there, see what your credit scores are, basically get yourself ready for the opportunity to buy a house. If you're thinking about buying a house in the next 12 months, it's a great tool to help you get started there. So let's take a look and see what are we chatting about here today? What buyer activity tells us about the housing market? That is our subject today. Well, the housing market is no longer experiencing the frenzy of a year ago. Buyers are showing their interest in purchasing a home, according to U.S. News. Quote, housing markets have cooled slightly, but demand has not disappeared and in many places remains strong, largely due to the shortage of homes on the market, unquote. That activity can be seen in the latest showing index, which is a measure of buyers actively touring available homes. And if you're able to see, I'm looking at a chart right here. I go, great, thanks, Josh, for getting that up there. That our activity of homes are out there is jumping. The 62% jump in showings from December to January is one of the largest on record. There were also more showings in January than any other month since last May. As you can see in this graph, if you're watching us on ronsiegelradio.tv, any of our socials, the ABC News and Talk AM 1490 video feed. It's normal for showings to increase early in the year, but the jump this January was larger than usual, and a lot of that has to do with mortgage rates. Michael Lane, VP of Sales and Industry at Showing Time Plus, explains, quote, "It's typical to see a seasonal increase in home showings in January as buyers get ready for the spring market, but a larger increase than any January before after last year's rapid cool down is significant. Mortgage rate activity this spring will play a big role in sales activity, but January's home showings are a positive sign that buyers are getting back out there. Important to note that mortgage rates hovered in the low 6% range in January, which played a role in the higher number of showings. What does this mean? When mortgage rates eased, buyer interest climbed. The jump in home showings early this year makes one thing clear. While rates may be volatile right now, there are interested buyers out there, and when mortgage rates are favorable, they're ready to make their move. Bottom line, an increase in showing activity in January is a good sign that there are buyers who are eager to purchase a home. If you're thinking of selling your house, let's talk. So when you're ready, when the time is right for you, we're available. We're ready. We got a game plan set. That is the real-time real estate segment brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. Continuing our conversation with Todd Halterman this morning, we are chatting about the current economy, and we're not giving any. Todd's a financial advisor. If you want to meet Todd, you're more than welcome to schedule an appointment with him. He's gracious enough to come on and give us a education on what's going on in the marketplace. The rules of engagement don't allow for specific financial advice on a radio show like this. So he's able to give us 30,000 foot level stuff. How he feeds his family, supports his family, is by working with you on your unique goals and objectives and setting out a game plan for you. Right? The bottom line, and Todd and I have talked about this, and if you want to look back at some of our broadcasts where Todd's been on, Ron Siegel 1 on YouTube, you can see a lot of what Todd and I talk about is planning. And right now, regardless of what the administration wants to say or the Federal Reserve wants to say, we are heading, in my opinion, at a full-on collision course for a recession. The question is, will you have your head in the sand or will you take action? It's up to you. Todd's got some ideas, so I'm going to throw it to you, Todd. Just give us some ideas on how do we protect ourselves?
Well, the reality is making sure that you know the risks that you're actually taking. I think the biggest mistake across America is people don't understand the risks they're taking to make the returns they're getting. They're only comparing their investments to their neighbor, and they don't know that their neighbor is taking extraordinary risk as they're following their neighbor's advice. And when these types of times happen, real pros come to the top and actually make money for people when other folks are losing money and justifying it by saying, oh, everybody's down. And Ron, I'm here to tell you, everybody is not down. And if you are planning, not just investing, you would be up right now. And the reality is people are struggling with getting returns because they don't have a plan and they don't get introduced to tools and education in the way that you and I like to give them. I'll give you one idea right now. There's a thing out there in the world called buffered ETFs. Now, Ron, right now, I can tell you that if you wanted to go out and invest in the S&P 500 index, what if I could show you how to invest in the index right now, but protect 25% of your principal on the down? So if the market goes down in the next 12 months, 25% or less, you lose nothing.
Wow.
If the market goes up 13.5%, you get all the market return. The catch is, Ron, if the market goes up more than 13.5%, an investor today, as of today, would be capped at 13.5%. So in exchange for the downside temporary protection, you're going to give up some upside, but I don't see a 15% or more return in the market right now. So it's really about being defensive and protective but maintaining your position, because at any time the market and the economy could take off in the second half of this year.
How long do I have to hold that for, Todd?
12 months. You don't even have to hold it for 12 months. It's liquid. It trades like a stock. So we could be way in the money in the fall and just sell it like we would sell any stock and be done with it. And there is a small expense to have a buffered ETF. And we buy these. They used to only be available institutionally for pensions and large institutions. We're now able to get them accessible retail.
That's pretty amazing when you think about it, because you don't have a downside. Now, let me ask you this, because one of the questions I would throw at you is, so this you got the exposure of the S&P 500, but why wouldn't I just want to go into a 10-year treasury that's giving me 3.5% right now?
Well, the treasuries, obviously the treasury right now, the yields are going to be going down. And the yields are going to be going down in the treasury because the values are going to be increasing. So if you're a yield investor, that's not necessarily where I would put you. The fixed income and the bond market looks to be a very risk reward friendly place to be, because the market's already taken the write downs of interest rate increases. The mortgage banking industry right now looks very, very solid, as long as you pick the correct mortgage banking institutions. Credit's going to suffer for a while, but in the recessionary times, we go with really strong companies. I call them aristocrats. Aristocrats are companies that have been profitable at least 25 years in a row, and those profits have been growing yearly. I'll give you a company like Coca-Cola, almost 30 years of straight profits. They are the bottom of the list of aristocrats in the S&P 500, with Dow Chemical being number one, with almost 50 years of straight profits. So we believe in profitable companies. We believe in the treasury, but you need to understand that yield's going to be going down. The bond market's got a lot more room in it right now for risk reward than the stock market does. But be on watch. Dividend paying companies and value oriented companies is really where you want to hang out, while the government's trying to figure out how to transition to the next, what I would call expansion phase.
So is there a way to go to invest in what you're calling the aristocrat companies in one of these buffered ETFs?
Yes.
Okay, so you don't have to go into the entire S&P 500.
What we can do is we can help people allocate and protect their, what I'll call the corporate principal in their portfolio, by building buffers and defensive strategies to give them high yield and low risk. We have all kinds of instruments with the S&P Dividend Aristocrats in a buy right portfolio, where it's paying a 9% yield, and you own positions in companies like Coca-Cola and Dow.
9% yield is that's tremendous. I mean,
there's some unique tools out right now that people just don't understand, because they're used to buying mutual funds or just your standard ETFs. But unit investment trusts and these buffered ETFs bring in a component to managing money that only hedge funds usually get to do. And these are a really great risk reward component for today's planning.
So let me ask you a question, Todd. And I know you probably don't have a precise answer for me. How many, so we're, as we record right now, we're in the middle of March. And when we come back, I'll give you about a minute here to come up with this answer for me, because we're going to take a break. But in the last, since maybe the beginning of December, how many trips have you taken for educational events?
So
what I'm saying is, where you're going and you're getting continuing education or learning about new products, new programs, new processes, new tricks, tools, trades, strategies. Mm-hmm. When we come back, I want to talk to you about that, because it's something that I think is very, very important. And I want to chat with you about that when we come back. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. You can reach me anytime on our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a minute.
Ron Siegel Radio, your home
Do you know a homeowner experiencing divorce? Do you know a real estate reference in the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender. Are you tired of paying rent? Are you tired of paying someone else's mortgage? Do you know qualified folks can potentially purchase a $500,000 home for less than $5,000 out of pocket? Ron Siegel can help qualified people purchase their own home at amazing interest rates. If you're tired of paying someone else's mortgage, reach out to Ron today at RonIsMyLender.com. That's RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Hey friends, do you dream of mortgage-free home ownership? Are you aware that even if you own your home free and clear, it could still be costing you thousands per year? The Siegel Lending Team can help you generate tax-free income, accumulate family wealth, and maintain ownership of your home. By simply emailing your most recent mortgage statement, you'll receive a no-obligation real estate plan. Learn more by calling 1-800-306-1990 or email me your recent mortgage statement to PEAR@RonSiegelRadio.com. Licensed under NMLS 217037, Equal Housing Lender. Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at RonSiegelRadio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit RSRNoDebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit RSRNoDebt.com. Log on today for your free analysis, RSRNoDebt.com. No purchase necessary. The free analysis takes only 2 minutes. RSRNoDebt.com. Ron Siegel Radio is your home and mortgage connection. Go to RSRNoDebt.com. RSRNoDebt.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. This segment being brought to you by my certified divorce lending professional, mycdlp.com. If you are going through divorce, I'm sorry. If you have any friends or family that are going through divorce, get a copy of the Divorcing Your Mortgage Workbook, mydymworkbook.com. It's free from your friends at Ron Siegel Radio, mydymworkbook.com. We're going to continue our conversation. Todd Halterman is with us. He is a financial planner, not giving financial advice, but giving us some education. And before the break, I was asking Todd for a very specific reason about education, because he comes on here and graciously gives us a lot of education every month about different tools. And my question, and the reason I'm throwing this at Todd, is Todd and I are good friends. Todd travels a lot. I know that. What are you doing to travel to get educated? What are you doing to get educated on how to manage your own portfolio? What are you doing to get educated on how to manage your 401k? I know you're going to the company 401k meeting where they're telling you about all the new products are available. And some companies will have, a couple or 300 products available. And they say, what do you want? And put your beneficiaries on here. And, we don't know if you're going to do that right or wrong anyway. And maybe they'll even offer you a private counseling session with one of the financial planners. But you don't know the right answers. I'm telling you that because, I was licensed with a Series 7 license to trade securities. I had a Series 66 license. I had an insurance license. I didn't do all the continuing education, so they lapsed. I am not qualified any longer. Todd, how often do you go for training on these kind of things? Since December.
I'm about once a month. The first quarter of this year, it was a little heavier just because there's several economic summits, state of the union or economy, if you will. But I really try to get perspective from global interests. So I try to go to programs that maybe have a Fox News slant to them or a CNN news slant. I find some credible information these days coming out of Al Jazeera Net and BBC. Somehow the global media tends to tell a little bit more of the honest truth about some of our domestic problems here in America. So it's interesting to see the different slants in media when you're going to different summits. But I would say monthly I'm doing something to do a deep dive in some sector, industry, or portfolio.
And then as a financial planner, you get all kinds of different wholesalers. And basically that would be considered something similar to doctors don't know about all the drugs. So the drug companies send drug reps to the doctors to educate the doctor on what the latest and greatest products are, what the education is on it, what the studies are, who it can help, how it can help. In the financial industry, you have wholesalers that'll come to you when you're a producer. You've got hundreds of them at your disposal all the time trying to give you more information. Am I right?
Sure. Always. They're in our office weekly, just trying to suggest different tax tips, tax mitigation techniques, which is where my focus usually lies, or how to protect people. Like, wouldn't it be nice, Ron, if you could have an S&P 500 index fund that if the S&P 500 index goes down 10%, your principal's protected and you actually get 10% added to your portfolio? Those tools exist, but we learn about those from innovative people when we go to these economic summits. And these are things retail investors are not seeing unless they have professional help.
So the economic summit, to try and dive a little bit deeper into that, what happens is you get somebody that's, for instance, whoever's putting on this summit is going to invite maybe one of the head economists from Goldman Sachs or Chapman University or Harvard or something like that to be a keynote speaker. And to do that, they charge people like Todd money, but then they also have generally, and I know they used to at least, at the back of the room or in another room nearby, there's event sponsors who pay to be able to share their latest and greatest with people like Todd. Is that correct?
Sure. It's like going to a big farm conference, but it's all about money.
Right. So the point that I'm getting at is Todd does this all the time so that he can bring you information. How can I, as an individual, a radio guy, I'm leading a mortgage team, how could I possibly compete on a knowledge level with Todd? How could you, as a plumber or a doctor or an accountant, how can you compete? You can't. The way you compete is you hire somebody to do what you don't do. I don't do financial advising, so I can hire Todd to do that. I don't do plumbing. I had a drain clog. I called a plumber. Now, I wouldn't call the plumber to ask me about, this S&P buffer fund that Todd just told us about, right? He's not going to know anything, or a buffered ETF, whatever it is. I'm not in that world, right? That's why you have to have great people that understand these things on your household board of directors. And I'm going to suggest, if you think that the last 2 years, Todd, back in the 90, in the 90s, late 90s, early 2000, when we still had a stock page in the newspaper, it used to be fun because everybody was a great stock picker. And like you said in the earlier segment, they looked and they said, oh, my friend is doing great in Apple, so I'm going to buy Apple. Or you threw a dart at the stock page and you found a winner, right? That was called a bull market. It wasn't called knowing what the heck you were doing. you could, anything you touched improved. I don't think we're going into that market right now. Do you?
No, that's why I said earlier, real pros come to the top in bad markets. You're going to find people that actually manage money instead of just invest money come to the top during these times. I enjoy helping people defend their independence and their financial freedom, but we actually are very proactive in defending that. And we believe a great defense wins championships. Offense just gives you a story to talk about the water cooler. But we want people to win, and then we want them to make more, but we want them to keep it too, Ron. There's a big difference.
Absolutely. And, if you follow Todd's guidance, the water cooler might actually be the cabana boy bringing you a drink instead of you being at work, right? I mean, because that's how you get to retirement time.
I had a client this week come in and thank me because he got his index fund report in, and the trust put 8% back of money he would have lost in his portfolio, and we turned around and we rebought that index at the bottom at a discount. So he gets it. He gets the protection, and he gets the opportunity to get the money back and then put it back in at the bottom. And he's up 4% right now based on the timing of when his trust renewed. So it's just a matter of understanding how to protect yourself and make money when times are tough.
Now, do you put 100% of his money into one place, Todd, or do you diversify?
We love to diversify. In fact, if there's people out there that want to make 3 to 5 times their investment over the next 5 to 10 years, the NASDAQ is full of opportunity right now. You just have to be willing to hang on for the ride.
And sometimes number one, you have to look at your time horizon, right? And what is your risk tolerance? Can you sleep at night if it's going up and down? That's the big question you have to ask yourself.
But what if it's buffered? What if you got a NASDAQ ETF that's buffered?
Wow. Now, let me ask you this, though, because like last year or the year before, the NASDAQ was up, but it was like 5 companies drove it and the other 1,000, were dragging it.
Sure. That's why you see the volatility you see. There's not a lot of money movement right now. And that area of the marketplace has been hit really hard because of the banking environment we're in with this high inflation, high interest rate raises. So you see that stabilize. You're going to see that technology market and these global scalable companies really roar. But you got to be a planner and plan in different segments of your life so you can buy an asset and hold it for 10 years.
So if you want to plan, now there you go again, Todd. Planning, a lot of people don't even know how to plan, right? They
react.
Exactly. They're reacting. I saw on the news that SVB was down, so my bank must be down too, or there must be a problem with my bank too. And maybe not. You got to talk to somebody that understands these things, knows how to look at it. Right? Am I on track there, Todd?
Well, it's really about perspective and having perspective. If you're going to do your own surgery, you don't have the best perspective. If you're trying to do all your own finances and all your own legal and all your own tax, then that's fine. You can do it, but it won't be the best outcome. And usually that's just because you're afraid to pay somebody or you're afraid to get ripped off.
And if it's the latter, call me at 800-306-1990 because I do talk to people all the time. There are scams out there. I know good people. Would I say that, Todd is a dear friend of mine? He does a great job for people. I know clients that have gone to him. They're very, very pleased. The idea there is you got to know who you're talking to, and you got to know, does the person that's introducing you know what they're talking about? That's a big issue as well. We're going to be doing a seminar coming up with Todd the end of the month, and it's for sophisticated people with highly appreciated assets. So if you have an interest in joining us, give me a call. We'll see if it's a right fit for you. But we've got that coming up at the end of the month. Todd's going to be coming into Southern California for a very brief visit. Again, you can give me a call. It's only for a select group of people, but it might be right for you.
You make it sound really fancy, sophisticated.
Yeah, well, anybody that watches me, Todd, knows that I'm not a sophisticated guy.
Oh, I know, but we're literally putting on a class for people to learn how to sell investments or real estate or businesses who are highly appreciated. And you don't want to pay tax at closing, and you want to use that tax money to build your life. We can show you how to do that and how to rescue 1031 exchanges. Really, it's about keeping more of your profits when you've taken all the risk.
There you go. So give me a call if you want information on that, 800-306-1990. Actually, you can go right to the website. I think I've got it on a site, rsrnotax.com, rsrnotax.com. We'll call you and chat about it and see if it makes sense for you. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean, who are engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
About a minute, my boss just pushed me over the limit. I'd like to call him something.